Alright, episode or lesson, I think it's lesson 7 now. I think it's lesson 7. Kind of a short one. We got chart patterns, alright? So, chart patterns are just patterns. They're just like ways the market moves, or ways the candles move that they do over and over and over again, right? Like, chart patterns are going to be here forever, right? It's just the certain things that the market does, right? Certain things that the candles do that you can identify before they happen and make money off them. So a couple of the common patterns we have, I'll draw them out. A couple of the common patterns we have is something called, number one is a head and shoulders. So a head and shoulders, it looks something like this, right? You have candles coming up, then you have a move down, then you have the candles coming up above the recent high. It'll then come back down, right? And what it'll do is form this kind of three things, and these three kind of pyramids, three kind of triangles. The two on the outside would be equal height, and then you got this kind of like apex, right? So what the candles do in a lower time frame, if you look at it, you'll have a bullish move up, you'll have a bearish move down, bullish move up, you'll have a little dip in the middle probably, it'll come up again, move down, retest this point. This point is the point you want to focus on, right? The rest of it doesn't matter. You want to focus on this point here. So I'll show an example right here on NAS. As you can see, we have a high point, right? You make kind of a neckline, it's called. You got the bottom line, right? You got this bottom line along the bottom, it comes down, retouches it, right? Comes down there, then we got it moves up again, breaks the high, then it breaks back down and comes down here. As you can see here, the little thing it does in the middle, right? You got this, so you got this pattern, right? Up, down, break up, break back down, and this is the point, right? You pay attention, this is the pinnacle of the head and shoulders. This is the best way to trade it. You want to just trade it, you want to take a sell position here on this point, right? So when you see this thing that does this, when you see a pattern that comes up and then breaks back down and rejects, so say it's like, you know, like here for example, you can see, you can anticipate what it's going to do, right? If you're looking at this, you're thinking, well, what's it going to do? It's going to, like, we have this low here, we have this low point, and then we have this recent high, right? We're forming the pattern. What happens next? It comes up, taps into that, and moves down, right? So that's that's what happens, right? That's probably the best chart pattern you can get, and probably just the best one, right? So that's how it plays out. You got to take this point. This is the most pinnacle point, and how you can spot it before it happens is if the candles, they move up, you have an up move, it comes back down to this low point, then it comes up, it breaks this high point, then it comes back down to the low point, then you want to wait for the retouch on this point, and it'll move down and break this point. That's the best way I can explain it. There's only like a couple more chart patterns that are actually useful. You have like a double bottom, let's say double bottom. I think I have one marked out, double bottom. So like something like this, right? Just a simple, you make candles make a low point, it has a reaction up, you come up like this, so you make a low point, it comes up, then it goes back down to the low point like here, and then it moves up again. So after it makes a double bottom, you can probably expect it to move up, and if it moves up and comes back down, right, to the double bottom, so you make a double bottom like this here, and if this were to move up and come back down again, you can expect a triple bottom, right? That's the most you can have is a triple bottom, and then it moves up. But it didn't, it moved off the double bottom. But if you can get a triple bottom as well, so it's just, it comes down once, twice, then it moves up, right? And the thing is with these double bottoms is that eventually the price will always come down below this. Price will always eventually, the move is started by this, you get a lot of bullish rallies off this, and then it just breaks it eventually, right? So you can get double tops as well. You can get double tops. You can get basically I'm gonna try find an example of a really nice one if I can. Here you go, right here. What it just did, you have a high point, it rejects the high point, and you have a very strong move down. Now it could have rejected any of these high points. There's no real way of knowing, but this is the way that it went. It just rejected this high point up here and moved back down. So that's it. That's the most important ones. That's the most important points, the most important patterns. So you can look up on Google, like, you know, head and shoulders and double bottom, double top. So I'll write them out. You got one, the best is head and shoulders, right? It's the best one. Then number 2 is double top slash bottom, and then number 3 is probably just a triple top slash bottom. Actually, there's one more thing that I want to show. It's called a wedge. So what I went through, it's basically just price is getting wedged in between 2 points. Eventually it hits a point of interest and it falls out. So like, you can see these wedges everywhere, right? You can see wedges everywhere. Here's another head and shoulders, by the way. Again, another head and shoulders. High point, back down, up, back down, retest, goes down again. This is the point you want to be taking right here. Bang. Right, and this is the best point to take a trade on. So you got one more thing, and what price will do is it'll wedge itself. So I can't find an example right now, but what you're gonna see is you're gonna have a trend line going down like this, and you're gonna have a trend line going up like this. And what the candles will do is they'll come in and do this, right? You're gonna see this a lot. Candles will come in and do this, and eventually what's going to happen is people are going to buy or sell it out of it, and it'll just break up, right? Or it'll break down. But those, you know, those aren't as good, you know what I mean? I don't really trade them. I don't really see them too often. And see, there's a problem with chart patterns, is that they're not extremely reliable. The only one you should really be trading, in my opinion, is the head and shoulders. Head and shoulders is probably the best, most reliable thing you can trade, because it just works the best. So take away from this video, write down head and shoulders, study head and shoulders, and only trade if you want to trade patterns, just trade head and shoulders. So that's all I have to say. Just there's a few common patterns, that's how they play out. They're not that important, they really aren't that important, but if you want to trade them, or you want to take them into consideration, only trade head and shoulders. All right, in my opinion anyway, head and shoulders is probably the best one.